Okay, welcome to another episode of CFB Talks Digital Assets, the home of informed conversation about crypto for institutions building the future of finance. And as usual, I'm joined by my colleague in New York, Gabe. And also, because we do like to use our platform as one of the first and leading regulated benchmark administrators to basically promote good practice and, have an education program for interested parties, we are continuing our sort of efforts to bring to you guests on the show, some of the most distinguished and accomplished, influential guests. And the guest that we have today is, in terms of accomplishments, you can't get much more accomplished. His name is Mr. Jeff Yew. He's the CEO and founder of Monochrome Asset Management, a crypto or digital asset first asset management firm in Australia. So Jeff, we are so stoked to have you on board, and welcome.
Thank you. Thanks for having me.
Yeah. So Jeff's background, just very briefly, is he was a founder of a firm that was eventually became Binance AU or Binance Australia, part of the well-known global trading crypto trading firm, and that was in 2017. And in 2021, Jeff decided to launch Monochrome Asset Management, the asset management firm that is one of the leading crypto asset management firms in Australia. So, Jeff, can you tell us a little bit about the sort of journey to launching Monochrome?
Yeah, so we launched Monochrome based on a very need that's needed in the market that we've noticed when I was running Binance Australia as the CEO. So there is a shift when it comes to institutional interest, particularly in the US. We've seen a lot of rise of, big companies or listed companies that have interest in a Bitcoin treasury strategy, true MicroStrategy, for example. And we also started to see, the groundworks that big finance firms and asset managers like BlackRock, Fidelity, State Street, Bank of New York, people like that around the world that are very respected in the traditional finance space are starting to enter the market. But in Australia, there isn't really it isn't really a solution that is particularly accessible for that type of investment to come in. And also, to elevate the standard of service when it comes to crypto asset products to Australia, because Australia historically has been popular, sort of the operators that are popular are at regulated exchanges and brokerages, which cause issues with, non-transparent market, issues with things like which potentially become like FTX. If the exchange goes down, the assets are not protected because they are not segregated and not regulated. So a lot of this stuff are preventing what we see as the next wave of adoption for crypto assets. So I set out the vision to create the most regulated, the most safest, the most risk managed way for investors from retail to install alike to access, the asset class called crypto assets, which includes Bitcoin. So today, Monochrome operates Australia's only Bitcoin Trust, or in fact, any crypto asset investment product that is authorized by the new crypto asset licensing category that was created by the top financial regulator in Australia, ASIC.
Sure. Sure. So scrolling, winding back a little bit, the chief motivation to found Monochrome was because you wanted to utilize a regulated platform to bring regulated products to basically the public, institutions, and so on and so forth to further adoption. I think that's what you're saying, right?
Yeah, I guess so, because you have to have the robust marketplaces and regulated marketplaces for the next level of investors to come into the market, because your average in-store client or your average family offices, they have certain some family offices operate in a more liberal way, but there are family offices and fiduciaries that are very reluctant of accessing or can't access crypto assets if they are offered through unregulated platforms. That is a problem. So Monochrome is here to fix that. And also we do it in a way that helps educate the market as well, because, for example, we have a research division that helps educate fiduciaries, and they're all accredited, so they can actually earn CBD points by looking and reading doing quizzes on the research segment on the website. So these are the few things that we do to make sure that we don't just elevate the standards of service of the market to set a new wave of investment to the asset, but also sort of change that image of what people historically think about crypto assets, because most people still think that, oh, it's part of the Wild West, it's not something that's for them. But as we've seen with a lot of the traditional players starting to support and engage with the asset class, and it is time for the asset class to unshackle itself from its the little bit of the Wild West past, like any emerging technologies like the internet and things like that have historically been progressed.
Sure. Well, I want to get on to obviously talking about Monochrome Bitcoin Trust in a great detail in a while. But before we get there, let's talk about, because obviously Monochrome has had a relationship with CF Benchmarks pretty much since your inception, right? So because the main product that you are sort of offering at the moment is a Bitcoin-related product, it's obvious that you are utilizing the CME CF Bitcoin reference rate, the most liquid regulated Bitcoin price available. Now, tell us what your journey was, or tell us what your thought process was in landing on the BRR, which is the initial for it, as the reference index, the NAV price index for your funds.
Yeah, so we went through a very strict and standard in the traditional finance or financial services framework is that you got to do a long list of risk managed consideration of selecting your service providers, and benchmarking is definitely one of the important ones when it comes to a passive Bitcoin tracker product like a Bitcoin fund. So that is something that we've been running for a while now, like I said, from the very beginning. And CF Benchmark, running the CME CF Bitcoin reference rate is very different from the product sort of offering perspective from the other indices out there because of its large liquidity complex. So we've run a lot of research when it comes to selecting those benchmark providers, and CF Benchmark came out as a top. For example, it's the market participants in the ecosystem that you guys have selected revolves around a lot of the institutional products and partners. For example, the CME, the Chicago Mercantile Exchange, where there's Bitcoin futures and micro futures settlement price and things like that, and also the 4 p.m. London strike price of the BRR as well. So and that and many other factors led us to working with the best. Is we have to, if we want to do something, we have to do it in the best possible way to offer not just the safest and the most regulated product to the market, but also demonstrate to the market that this asset class is very primed for institutional involvement and disruption.
Yeah. Before we dig down a little bit into regulation, I think Gabe has some questions or some points to make about your use of the BRR and some sort of like utilities that arise from that are pretty unique that you would not necessarily get if you had opted for an alternative index. Gabe.
Yeah, I mean, no, what Jeff was saying is correct. It's the BRR index, its relationship and its liquidity complex and how it's fit into this whole wider piece, this ecosystem of a marketplace, by being associated with a premier derivatives exchange like the Chicago Mercantile Exchange, the CME Group. It really kind of unlocks a lot of potential for all sorts of different types of investors. And what Jeff's saying here is that if you look at a marketplace, you have all sorts of different types of investors with different types of goals. You have some investors who are maybe just trying to hedge, or manage risk of a position. You have certain types of investors that are trying to speculate and try and add risk. And then you have more of these strategic type of investors who want to take advantage of that whole liquidity complex and maintain a consistent exposure to a certain asset class. And if you think about these three as a triangle, the CME Group with the BRR index, and then you have traditional asset managers, who are using, or not traditional asset managers in the sense that you have Monochrome, who I would say is more on the vanguard of a digital asset manager, but these are would fall into more of a institutional type framework that are strategically trying to gain exposure to the asset class providing liquidity through this reference rate pricing that's also tied to speculators who are trying to, add or reduce risk, and hedgers who are trying to manage risk in their positions as well. So it's about, I think, this entire kind of ecosystem, coming together in the BRR liquidity complex is what we like to say. And that's really something that, makes, I think, the CFB unique, and tries to really kind of facilitate this kind of unique aspect for clients like Monochrome.
So let's talk about some technical specifications here, because we're talking about your Monochrome's intention, ambition to make sure this is the best possible, best-in-class product available for the current landscape in Australia right now. So one of the stipulations, because there are genuine specific stipulations coming from the ASIC's guidelines and rules for crypto-related products in Australia. And one of them, I believe, is the IOSCO. It's like an umbrella body for global securities regulations. They basically lay down some guidelines and some standards which indices and other sort of financial products need to meet in order to get a sort of rating, a kite mark. Now, obviously, the BRR has actually received that kite mark. And one of the reasons that you actually chose the BRR is because it met the standards that the ASIC and the sort of crypto-related unit within ASIC laid down as a standard that needed to be met in order for an index to be utilized by a regulated product provider. Is that not the case?
Yeah, pretty much. So ASIC, which what Ken has pointed out, is the top financial regulator. It stands for the Australian Securities and Investment Commission. So they are kind of playing the role equivalent, if you say in the US, they are kind of the combination of the SEC and CFTC. So they are very powerful. So ASIC came out with, in June of 2021, a consultation paper called CP343.
I remember.
And I want to participate in that. I think CF Benchmark did as well. So, and a few other industry players, traditional and also the digital side as well. So that sort of led into what was subsequently released called Report 705, and also an update on Info 225, which involved, all the stuff with businesses and, with exchanges and things like that with crypto assets, and also Info 230, I think, for exchange traded product when it comes to having crypto assets. But what is all these numbers aside, just so that the listeners would have a reference to Google it later to get in more details.
Yeah.
But what the consultation paper and also the subsequent release was of Report 705 was introducing a new licensing category, and that's actually very monumental, very historic in Australia, that ASIC did move on to issue a new license category called crypto assets, and it looks at the issuers and operators' suitability to handle the asset class is a very big factor, a very important factor, because crypto assets, like we know, are specialist asset class, and you need that knowledge and the operational experience to actually run it safely, because the recourse is very limited for a decentralized asset versus something more centralized like securities. So a few other things that ASIC did laid out other than custody, insurance, and one big thing is actually the benchmark. So IOSCO Principles of Financial Benchmark is named as one of the recommended to satisfy this this new product sort of issuance, and also it is a very widely regarded and understood benchmark standard as well globally. So basically, what ASIC is trying to prevent is operators or issuers to rely, for example, on a bad benchmark, which might be comprised of a single or very limited or very poorly selected crypto asset spot markets. That will mean that there is no robust and transparent pricing structures, which leads to, say, the NAV not being actually marking to the price of Bitcoin, because ultimately a Bitcoin fund or Bitcoin ETF, anything that tracks the price of Bitcoin, if its job is not fulfilled, objectives of the fund is not fulfilled when it cannot track the price of Bitcoin. So I can say our relationship started way before this thing happened. And we had basically the reason why nobody actually went down this route other than Monochrome is because before ASIC came out of the license category, in order to offer crypto funds, which is very common in Australia, it's widely offered under the traditional financial category, financial product category, but it's only available to wholesale clients or sophisticated investors only.
Right.
And with
so
that
really
market,
great point.
we know, it's a caveat emptor market. It's a buyers beware market. So it's about disclosures and things like that. So we've seen products that are referencing, a AUD Bitcoin benchmark on a single local crypto exchange and using that as their benchmark.
Right.
And the team, our operation team, look at that and it's like, that is just not the right way we want to go down that path. So we started sort of scouring the market and we found CS benchmark among other similar providers, but CF benchmarks stood out because of the reasons that we covered earlier.
Sure, wonderful. I that's exactly what I wanted to get to, Jeff, because I wanted to build a picture, which I think we have done, of basically the ASIC looking at the market in 2020, late 2020, early 2021, deciding it wanted to go forward, put Australia in the fast lane for regulated crypto products, listed or unlisted, and deciding what was the best practice. Opening consultations with both Monochrome and CF Benchmarks and other parties, providing input to that consultation. And so, and then coming up with the rules or guidelines, which they subsequently published later in 2021. And then essentially Monochrome's product and plans arising out of that. So as you can see, should be obvious that Monochrome has basically been at the heart of the regulated option for crypto assets in Australia right from the beginning, right from the inception of regulated crypto products in Australia. So I think that's we've illustrated that pretty well. With that done, I think now we should maybe move on and talk about the main product that Monochrome offers, which is the Monochrome Bitcoin Trust. If you were to give me an elevator pitch about this, Jeff, what would you say?
So the Monochrome Bitcoin Trust is a retail and sophisticated investor, both accessible Bitcoin trust. So it is a fund that tracks the price of Bitcoin, where it is a structure where investors would hold interest in the asset underlyingly. And one of the benefits of that is that not just it's offered under the new licensing category, which means that there's a lot of regulatory look through. In fact, the highest order of duty of care, the countries has ever offered to the asset class. But also, in terms of accessing the product, opposed to traditionally on unregulated platforms. So there is definitely appetite and market for a product like that. Although for the Monochrome Bitcoin Trust, we named it IBTC. It's still very new. It's an iteration of an improvement of our previous product, which was set up before a lot of these licensing rules was in place. But effectively carried through the same spirit of making sure that it's all tier one service providers in place. So for example, CF Benchmark is the index provider. State Street Australia is the fund administrator and also the cash custodian. Gemini Trust Co is the Bitcoin custodian, digital custodian, and also the application of the units is also through our share registry partner Atomic. So it's a very properly set up environment for investors. Wants that sort of full protection, but also fiduciaries to be able to use those products as well, whereas previously they can't. So we are, and it's also no secret that we are building it to be an ETF, but there's no promises on that. We could put a big caveat there. My legal team reminded me of that today. It is designed to meet and exceed standards that ASIC has put out, and we're the only crypto type of investment product in Australia today that is offered under this new crypto asset authorization, and that has been a while now in terms of that licensing availability, but it's so hard for the market operators, traditional especially, to get past that relevant digital experience to be able to secure a licensing revision. So we are very privileged to be the one that is able to carry that badge for now. But we do hope that more players in Australia would follow suit and come into that regulated position and achieve that status, because it is the safest way for investors and families and people, just average people, to access products. When it comes to crypto assets, there's so many risks that people don't understand. So many things that can go wrong on unregulated platform. We've seen it with the Terra, Luna, FTX, Three Arrows Capital, and all this stuff should not have happened if there's proper regulatory oversight in place. So that's what Monochrome is trying to provide. Like, prudent risk management is core, absolutely core to how Monochrome operates its business. That we're continuing to invest in that in those funds, despite us already being in that regulated position.
Sure. That speaks to the essentially the persistence, the commitment, and basically the serious-mindedness of this aspect of the space that you occupy, and that should be coming through loud and clear to anyone who's observing closely. What I wanted to ask you, Jeff, is now we talked about ASIC and the way that ASIC has paved the way for the growth of a regulated crypto asset industry in Australia. We've already seen some players taking advantage of that new space, those new guidelines. I think we've had a couple of listings. We've also had a couple of delistings, if I'm remembering correctly. What went wrong there, do you think, if you don't mind me asking?
Yep. So the story of that, I would like to sort of highlight here, is that there's a difference between a actual license authorized crypto asset license authorized exchange traded product versus something that is using a more funds of funds manner to get around that requirement. Right. So it is worth noting that there's so far no crypto ETFs being listed on the main stock exchange, the ASX in Australia.
That's correct.
The ones that you're referring to, can just refer to that on the so-called the other smaller crypto, not crypto, but a smaller stock exchange in Australia.
CBO in Australia, isn't it?
Called CBO Australia, or they used to be called Chi-X.
Yeah.
So we know it's a small industry. We know each other, things like that. We've been involved with conversations very early on both exchanges, and obviously Monochrome is very much more focused on the ASX at the moment. But what sort of happened there was there is basically a guideline that said that if the fund holds more than 5% of crypto asset financial products, it needs to come under this new licensing category. So, there are some interpretations, whereas if you're holding a fund, where it's overseas or domestic, that happens to hold crypto asset underlyingly, but it's not offered to, so for example, it's a wholesale fund, the retail fund holds the interest in the wholesale fund, and it basically can technically get away with not being called a crypto product. So that's how some providers roughly get around that and jump the gun on a sort of Bitcoin ETF listing. So like you did say that, yes, the response wasn't good. There are the listings and things like that happened since, just because that is combination of just the market factors. I think most of them launched at a very poor timing, so not to the detriment of their sort of, no one can predict the crypto markets. Like I said, it's very volatile, and they launched exactly right during the whole Luna Terra incident. So plus the fact that the product wasn't really very much clear about what they actually sit in, what regulatory look through they actually have, and the protection the investors would subsequently to get, would put a bit of a question mark when it comes to platforms and dealer groups to offer those products and actually use those products and recommend those products. So those are sort of combination of factors. And Monochrome, we obviously are very close to the action of this. We were never intending to be the first. That's one other sort of surprise that we've got, and because there are not a surprise to us
at all. But I absolutely understand why people might.
And they're much bigger names. They're much sort of more louder players that claims that they want to be the first and things like that. But if you look back into the media coverage, like Monochrome has always stand firm of like, we should not rush this product. We should sort of make sure that the priority is on the investor. You want to make sure that product that you get out to the market is the most most regulated, most robust product at all. You can't have something, especially as new as crypto assets, to be offered something like a quasi-regulated, look around kind of solution. It has to be properly done. So, like my mentors would say that, and especially in the traditional finance space, there's a lot of incidents where success can be traced back to people just consistently just standing firm on doing the right thing. And inversely, there's also things that can go bad and you kind of trace back, and it's usually someone took a shortcut somewhere before and leads to that. So that is exactly sort of how we operate. We make sure that absolutely the most robust and best product ever.
So I wanted to press that lever actually, Jeff, with respect to some of the prior attempts to get a listed crypto asset product going in Australia. It's not necessarily that important. We just use that as a sort of reference. But the main point for us here is that IBTC, the Monochrome Bitcoin Trust, has from its very, foundations gone a different, more transparent route. It's not trying to use it as a device or some sort of like maybe a loophole within the regulations to get to a listing or to get into existence even. Rather, it is going the sort of direct route, the transparent route, and building on those foundations in hopes that at some point in the future, this, as you've mentioned, it's not a secret that you would like to, at some point, to have an ETF product, at some point in the future to actually have that listed product. I think that's correct, right?
Yeah, that's absolutely right.
Sure.
So Jeff, you talked a little bit about the regulatory environment, and it sounds like, Australia is taking, a different approach than what we've seen here in the United States where I'm based, and that, they are taking these considerations that digital assets, cryptocurrencies have these unique kind of asset class characteristics such as decentralization, and they're creating like a specialized category. And it's no secret, I think, like you were saying, you mentioned earlier that you want the trust, eventually, or you're trying to maybe look towards an ETF type structure for that fund. What has that process been like, working with regulators? What kind of hurdles have you seen, or what kind of, what's the process been like for something like that? Because that's something that, I think is very interesting, and a lot of the listeners would like to just kind of learn a little bit about how other countries are doing it.
Yeah, that's right. So I think it's worth sort of mentioning the good stuff first before we go into the more challenging experience. So I think what was good is actually the process that we've gone through with the regulated asset. So everything is very predictable. Everything is as per what industry standards and people's experience in getting license revised and requisitions and things like that. Those are the predictable ones. So there's nothing that stood out of the norm. We were expecting to get it within that 6 to 9 month period of a license revision, time frame. We got it on August of last year, 2022. So in fact, the sort of leads into the more challenging part is that, obviously back then there was a lot more noise than what's today when it comes to trying to get a retail crypto asset product out in the market, where it's an ETF listed or unlisted fund, for example. So we were under the pressure a little bit, even though we don't want to sort of like be a part of that sort of that sort of hype train, because but you can't bear from sort of looking at there's some people that might have been seems like they've jumped the gun and went on in a more sort of non-license authorization route, not non-crypto asset license authorization route, and they even got listed before we got the license revision. And Monochrome was the first batch, if I'm not wrong, Monochrome was the first batch to actually apply for the license revision when those facilities was available in December. So we did had a conversation with certain ministers, certain officers that have been helping us, in the regulators front on the application to seek clarification of like, is that the actual intention of letting those type of products through before an actual properly licensed one is ready to go into the market. But the response was pretty much on that there are certain things that asset does have power, but there are certain things that needs ministerial work to sort of enforce certain boundaries to prevent sidestepping to happen. But we were taken by surprise when the market actually did the job of filtering off products that are not up to standard. So
yes,
it is a bittersweet moment because it does also makes our job a little bit difficult, because then we got to explain to the market how Monochrome is different. What sort of everyone in the market will tell you that they're regulated this and that, and that's our challenge in the market. And these are not just unregulated players that claims to be regulated. We're talking about like people that are operating under a financial license, but are talking up their product, but they're not offered under a crypto asset authorization. That's the main problem. So we are tasked to sort of like re-engage with the market to explain to people, hey, this is what we're doing, and usually comes back to like, how is it different? I mean, there is also funny conversation I had with the advisor the other day, and he asked the question, so what is the difference between buying IBTC and buying crypto on an exchange? And I was and it's like deep down, I really want to give an answer.
Take it back, I
was taking it back a leap, but it is a responsibility that we have to carry, because we are the pioneers in this market. Like I do not have the heart to tell him that, like, what's the difference of going to a financial advisor versus going to a fortune teller, right? It's like one's properly licensed, have the credentials to do it, and one's totally unregulated. So that sort of thing is something that we have to work together as an industry, and that's why we're doing this kind of podcast together. I think it's very healthy to let people know what the actual regulatory status is in Australia, and sort of how to look for what to look for in terms of all these products out there that all claiming to be the best, all claiming to be regulated, but with regulation, the beauty of it is that you don't have to trust the people marketing this product. You just have to trust the regulation. But you have to know where to look. That's a problem.
Yeah, crucial points. I wanted to ask you something specific about the IBTC, Jeff. Mentioned in one of the previous conversations we had, the bare trust structure, because I think it's actually important, because it has a perspective on basically rights to the underlying asset itself. So if you can explain a little bit about that, that'd be brilliant.
So the bare trust structure is different from a standard unit trust structure, where, in simple terms, a bare trust can be looked at as like every asset holding is pigeonholed. So Ken's asset, Ken's interest in the Bitcoin is here, Jeff's here, Gabe's here, and etc. So in a standard unit trust, everyone's pulled together, right? So the problem, sort of reason why we sort of explored bare trust in the first place was actually two reasons. So one reason is more sort of philosophical, and one reason is more practical. I'll touch on the practical reason first. The practical reason is actually on a tax issue that most Bitcoin funds would run into when it hits a certain number of investors. So in Australia, Bitcoin itself, it's not a financial product under the Corporations Act, and I think it would never get to a status where the Corporations Act will be revised. That's going to be historic. It's going to take a long time. So there are certain tax treatments that aren't very clear, and we just didn't want to take the risk of, coming up with a product that has further down the line ambiguity when it comes to tax treatment, because it's very important, in the market, in the asset class that can go up and down very, very sort of wide magnitudes. So we came out with a solution that effectively resolves that, because a bare trust, like I said, it's a pigeonhole system. So when assets move in and out of the structure in specie, so it can Bitcoin in or Bitcoin out, theoretically, at least I can't offer tax advice, but per our assessment of that and our advice that we receive, that wouldn't constitute a change of beneficial ownership, which gets around the problem of effectively everybody has in a unit trust past a certain investors. If we're not doing this, it would run the risk potentially that the losses and gains would have to be socialized every time someone sells their position, which does not make sense if you're just holding long term. So the more philosophical reason that we set up chose to also do the bare trust, but it's also in coincidence, is that, like, I personally believe that Bitcoin a Bitcoin's sort of self-custody aspect or function is very important for people to learn eventually when they're comfortable. So we do not want to make or build, even though it's against our own interests, a structure where people can leave if they want, right? It's not just a open-ended in a way that you can redeem back to dollars or Australian dollars, but it's also gives people the ability to take and withdraw the Bitcoin out in specie.
Exactly.
And, if they want to do self-custody when they're comfortable, or, sometimes we've helped people that, these are examples where self-custody is not for everybody, despite of how much I believe self-custody is very important. Like we have instances where we guide clients that have to deal with a sort of, family situation or a period of time where they just cannot focus on doing self-custody. They want something that actually protects them to the highest standard possible, excluding, the Wild West unregulated players and platforms. So these are a few reasons why we want to make it sort of the most flexible product that people are not locked in. Because the main difference is that if you want to take your Bitcoin out into self-custody in a traditional, more of the US futures ETF or some of the Canadian Bitcoin ETFs, the only way you can do that is to sell your units, crystallize the tax sort of events, and then go to potentially unregulated player, expose yourself to risk to buy the Bitcoin and then take it out. And we just think that you can avoid all this stuff by building it exactly how we do it, where the ability to withdraw the Bitcoin in specie out, going directly to a cold wallet that they can set up through, and it's facilitated through our custodian partner, which is Gemini Trust Co.
Sure. The other aspect, I think, and it's another slight irony here, is basically as a retail-orientated product, the stipulations and regulations are essentially higher. Inherent within the regulatory process is, the desire to protect the individual and retail participants in markets, maybe more than the alleged more better informed wholesale or institutional sort of participants. But of course, when you actually do that and you actually do fall under the regulations and you're compliant, you become a lot more attractive to the institutions as well. I think that's also another part that you can actually, another sort of lever you might be able to push going forward. Is that not the case?
Yeah, so we have conversation in the market very broadly from all levels of participants in the fin services industry. And all the common feedback is that it has to be a retail fund, preferably an ETF. So this is why sort of we're pursuing, making sure that we can have a product that totally addresses the need for the market. Like you said, a retail product is always comes with a much, much higher regulatory protection and look through, because it is, the regulator views retail investments as needing more paternal oversight than sophisticated investors investing in their own ventures and willing to take the risk so they can stomach the risk better. So like I did mention before, wholesale only products are run under a caveat emptor system, the buyers beware market. Like theoretically, you can agree on anything as long as both parties come to agreement, and you're good to go. But in a retail environment, it's not a handshake deal with the end investor. It is a process you got to go through with the regulator. In this case, with crypto assets, to acquire a license authorization, it comes through a lot of different factors. But also on a product development standpoint, you got to demonstrate that this product fulfills all the provisions for custody, all the provisions for insurance, has the proper channels for dispute resolutions. Basically, in sort of simpler words, if this a retail fund go pear-shaped, will investors get hurt? If the answer is yes, ASIC would likely not approve a product like that, and the answer always has to be no. So the IBTC product is structured that it is technically not important in the equation because it shouldn't be, and these are the benefits of coming under strict, robust regulation. And I think most people are starting to realize that Australia does have crypto regulation. Because it's a misnomer that you see in the news where some unregulated players are claiming that there is no regulation, but in fact, there's no regulation that they like, right? So
Yeah,
it is very
exactly.
important
Yeah,
to actually spell to the market how to actually view, and that's why I mentioned CP343, I mentioned Report 705, I mentioned Info 225, Info 230. These are all available on ASIC's website, and people can look at it today. And it's
absolutely.
not something that is up for a couple of months. It's almost good part of half a year, even longer. That it's there. People still
Yeah,
are sort of in the question of whether Australia have crypto regulation or not.
yeah,
The answer is yes. Australia does have crypto regulation.
yes. Yeah. I mean, certainly she's brilliant. All very indicative. Really, I think people should be able to take away from this conversation that the very fact that IBTC exists, prima facie in itself, demonstrates its market integrity, its worthiness as a product. One other thing I wanted to mention as we begin to round this off, Jeff. A lot of these things that we're talking about is very largely the pursuit of excellence in many, many ways. Obviously, the most reliable, the most accurate product, the best product in class. Also, of course, the safest product to address a market like Bitcoin. But one other aspect of that is about the NAV striking issue. And when we said NAV striking, just a really, really quick simplification. Net asset value, this is a process that is undertaken for funds of this nature, typically once a day. And it's essentially a valuation process where you take the index. I know I'm explaining this to you. Really, I'm not explaining to you. I'm explaining to other listeners who may not be familiar. You take the index price at the time of the NAV striking, and you use that price to calculate a value of the holdings. Now, the important thing here is that you can sort of strike that NAV at any time of the day, but you want to strike that NAV at a time of the day that is most representative of the most liquid trading in the market possible. Now, I understand that the NAV strike for the IBTC takes place at the London market close, which is 4 p.m. London time, rather than the Australian market close. And we've both jointly undertaken or participated in some research to sort of show what the best time to do that is. And I think you chose the London time. Can you explain a little bit why that decision was made?
Yeah, so to sort of cover that, we wrote a article called Time Zone Consideration for Benchmark for an exchange traded product or insurance passive spot Bitcoin ETP on our website. That essentially is a whole bunch of research that we did on why the 4 p.m. London strike is the most sensible in from pricing transparency and also the risk, preventing the risk of manipulation and things like that.
Yes.
So we do execute. It's very important to note that because the Bitcoin market is very concentrated in the USD market. So in terms of volume and liquidity, it's all in USD. The Australian Bitcoin market itself, and there are a few unregulated exchanges that actually runs direct pairs, but that's not good enough for a robust product that is close to meeting the regulator's expectation for an ETP. So we use WMR for AED to USD, and we use the 4 p.m. BR at the same time for the USD to BTC, and we strike that and create a synthetic benchmark to AED to BTC. So it is, some people that give us suggestions that technically you can execute the FX leg early in the day when the office is still open without triggering a night shift team, and you can execute the benchmark at 4 p.m. London, which is about somewhere past midnight in Australia. So we do have a night shift operations team that runs that. But one of the main reasons is that it's pure to do it all at once. And it's also one of the requirements, if not wrong, one of the requirements for an ETF that you cannot have benchmark to see that benchmark they are strike at different times. It has to be the same sort of exact instance. So definitely check out the blog that we put out on this one. Thank you, Ken, for putting a link to the blog for us.
Thank you very much indeed for that conversation, Jeff. Highly educational. Lots of stuff to take away, for the listener to take away. Essentially, as we've stated, the whole tone of the conversation, we've tried to lead you to the point to understand for yourself that basically this product, the IBTC, which is strikes nav against the CME/CF Bitcoin reference rate, the most liquid Bitcoin price, institutional Bitcoin price, has basically gone through every step of the regulatory process, right from the inception of the formalized regulatory process for listed crypto products in Australia. And the fact that it exists at all should be indicative of the idea that it has actually passed many of those stipulations and criteria. So we're really excited to see Monochrome out in the market as essentially the first product of its kind, and of course that it uses the BRR. And we're excited to see where the product might go next and where Monochrome might go in the future. It's regardless of ups and downs, the crypto asset industry is pretty amazing, and it's great to actually be a partner of a firm like Monochrome out there in Australia to participate in that future. So all I can say more than that is thanks a lot for joining us, Jeff. It's been really, really educational, as I say. We hope that you come back on at some stage in the future. I've been Ken, and we've been joined by Gabe in New York, and of course our guest Jeff. We'll see you again for the next episode of CFB Talks Digital Assets. Thank you.